What is up, everybody? In this video, we're going to go over what is trade tags. Not only am I going to go over what are trade tags, I'm going to go over how to read the statistics behind trade tags. I'm going to go over the last full trading year of my trade tags on the Tradecraft platform, and I'm going to break down what tags you should consider using. I've been trading for over 9 years at this point, and trade tagging is something that had got me consistently profitable. This, for me, is one of the most important things you can do in your trading in order to shorten the learning curve and gain clarity to what is actually working and what's not working in the market. Okay, so what exactly is a trade tag? Well, your P&L you get at the end of a trading session from whatever platform you're using. This is Jigsaw Trading, by the way. This is the P&L they give me. My trades are actually being tagged automatically by the trading platform itself. So you have the open time right here. So this is when the trade was opened and at what time. And this will be what time the trade was actually closed at, as well as the date. Then we have things like the trade duration. Now, not all platforms are going to give you things like this. This is telling us if it's a long or a short. This tells us the actual closed P&L. Over here, we have MAE and MFE. Not all platforms give this specific data right here. This is telling me how many ticks the trade went against me while the position was open. So in the case of this first trade, it went 4 ticks against me, and then it went 3 ticks in my favor while the position was open. We can see this trade went 20 ticks in my favor. Now, the closed P&L, I ended up taking the profits at 18 ticks. So the trade went into my favor 20 ticks, came back 2, and then I closed the position. So this specific statistics is telling me that I left 2 ticks of profit on the table. This right here is not printing a number. We can see it says 6 MAE, which, by the way, means max adverse excursion, how far the trade's gone against me. And then we have MFE, which we can see is not printing, so that's 0. That is max favorable excursion. So what that's telling me is the trade immediately went against me. Now, imagine if you didn't have a P&L statement like this. You just look at a broker's statement at the end of the day. You're going to see if you made or lost money. But what you won't see is, well, things like this. You won't see the timestamps, so you can't go look at a chart and figure out where you put the trade on or took it off. You won't know the duration of the trade. Was it a few seconds or was it several minutes? Because trade duration is important. You just might be better at scalping than holding from a statistical standpoint. You won't know exactly how much a trade made or lost down to the specific trade. You may not even quite remember how many trades you took. In this specific session, there were 6 trades taken. And then we won't see things like, did the trade go against me right away? As you can see, this says 0 seconds, and then the trade went immediately in my favor, 26. This is a little bugged right here. However, the trade went pretty much immediately. If we look at the timestamp, we can see it's 53 seconds to 57. So technically, the trade took 4 seconds to go really far. That's valuable information for us. So you're already familiar with your trades being tagged with information. Your trades being tagged with profit loss, MAE, MFE, duration, the timestamp. Now, if you have a generic journal, the journal will run other math and show you things like profit factor, the best time of day your performance is, things like that. However, the problem with generic statistics like this, or just exporting your statistics into a journal and getting a little more data, like profit factor and all that stuff, is those are broad, generic statistics that don't really tell us where edge is. This is why we need to tag our trades manually. So when it comes down to trading, there are 3 main categories. This right here is my attempt at drawing a laptop. This is going to be our technicals. This is market-generated information that is coming directly from your screen. This can be anything from pure raw price action on a chart. It can be technical analysis, Bollinger Bands, VWAPs. It can be gamma levels. It can be order flow on a depth of market. Whatever information that is being generated through your screens and through market data is what we're going to consider a technical in this specific tutorial. In fact, this tutorial is going to turn into a full-blown lesson. Next, we have you in the equation. And guess what? You have emotions. You have psychology. I've been talking to traders for a very long time. I enjoy communicating with the community. And 99.9% of you deal with emotions. I've not met anybody who has not dealt with emotions at some point in their trading that ends up getting in the way of them being able to trade well. Since you're part of the equation, you can screw up specific setups. However, without the tagging process, you won't know that. In fact, you are the one who is clicking the button on the computer. Therefore, management tethers you to the market-derived information. So you're clicking the button and you may be getting into a trade too late. That would be FOMO. You may be getting into a trade setup too early. Maybe the trade entry is perfect. However, you needed to hold more because the price kept running. Or maybe you held too long and the price came all the way back to your entry after going in your favor 20 ticks. This would be management issues. With the technicals, we have specific things as traders we are looking at to make trading decisions. Let's say from a technical perspective, I'm trading ranges. What I want to do is create tags around ranges. The reason I want to do this is because my trading platform simply cannot do this for me. It doesn't know that I'm trading a range. That's the intention behind my trading decision. It won't know that. I have to manually put that in. Right here are my personal range tags. And by the way, creating a tag in Tradecraft is extremely easy to do. You guys have access to a free version of Tradecraft where you can create up to 3 tags. All you do is just click on this new tag group and then you can add a new tag. We'll just put a test right here and then I can make it whatever color I want. So we'll just keep it this blue. And then I create it and then it's been added to my group. If I want to rename it at any point in time, this is what a tag is, by the way. I just click on this pencil icon like so, and then we'll just put rename so you guys can see it. And then you can sort of drag it and add it in different orders here. The way you actually physically tag it is we'll go into a journal. Let's say a trade comes in. Let's say this is the first trade. Notice everything is grayed out. I'll simply just click on the tag. Now, these are exclusive tags, so this specific group, I can only select one tag at a time. I can't do multiple. Whereas this management area, I can select as many tags as I'd like. So what I'm doing here is no different than your P&L, where it shows you entry times, exit times, stuff like this. I'm manually putting something in like this high time frame mean. So I'm trading into a favor. So I'm trading into a range. So let me break this down a little bit better for you. Let's first delete this right here. So these are 3 technical tags that I personally use. Okay, so it's going to say mean. All this means is range. So a green tag means I'm trading into the range. A yellow tag means I'm trying to do a breakout of a range. A red tag is going to mean I am trading in the middle of the range somewhere. And then the gray tag is telling me there is no range present at this point. Now we have higher time frame ranges, medium ranges, and micro ranges. Higher time frame ranges for me are going to be ranges that are on like a 30-minute chart or something that might be spanning several days. I like to look at multiple time frames. A medium range can be a range that's spanning for maybe 20 minutes or throughout the entire RTH session. Then micro ranges are going to be small ranges that show up on a 3-second chart because I like to trade really small time frames as well for precision entries. So as you can see, I put ranges in the technical area because ranges are price action. It's information coming from our platform. Next, we're going to have things like psychology. Here are 3 groups of tags. Now, traders typically experience 3 emotions when they are trading. There's tilt, which the opposite of tilt is calmness. I like to set my tags up in question and answer format. So are you getting upset? No. That green tag means good in this specific example. It's like a green light at a traffic light. Go, go, go. That is good. Are you getting upset? Slightly. That yellow tag means slow down. And then we have pissed off. At this point, I am emotionally tilted. My trading platform will not know how I am feeling emotionally. Then we have contentment issues. Your P&L, and this goes for a lot of traders, can influence your trading decisions. If you are taking a couple losses after another, you may be staring at your P&L and you are not okay with the P&L. And then you start trying to fix the problem or revenge trade. So are you okay with the P&L? Yes, it's bothering me. I'm not okay with the P&L. So this group of tags is telling me I am trading my P&L. This one right here is really important as well. Are you wanting to trade now? This is patience or FOMO. FOMO, or lack of patience, is one of the most common psychological or emotional issues you guys deal with. Typically, a lack of patience will lead to you making terrible trading decisions, which can lead to poor P&L, and poor P&L can lead to us making more FOMO trades. And then before you know it, after a couple of these bad trades, we start to get pissed off. And then if I see all three of these tags red on a specific trade, that is bad and I'm making terrible trading decisions. So right here, we can see those three groups: calm or tilt, content or we're revenge trading, patient or FOMO. So what is happening here is I could be taking specific setups. However, my psychology could be dictating those specific setups. Or I just may not even be taking my setups. I may be just trading in random spots because I'm revenge trading or I have bad patience. So with these two groups of tags, our psychological tags, our technical tags, we're attempting to figure out where edge is. Again, your trading platform can't do that. In the moment, you need to be tagging these things. Now you could, especially your psychology. When you know you are having psychological issues, it is good to look at your tradecraft platform, assuming you go with us. And if you aren't feeling it or you're feeling impatient, tag it, right? Some of the best times to capture emotional issues is during the moment. Now, another way to tag is recording your session. We recommend you record to YouTube because that is a free place to store videos and you could do it unlisted so nobody else sees your trades. And with our platform, it makes the review process extremely easy to do. You should be reviewing your trades. You should be recording them and reviewing them because as we go further through this video lesson, there are certain tags you're not going to be able to attach to a trade without the actual review process, which we will be getting later to in this video. Just so you guys know, at the time we were the only journal or tagging software that does this. You go into your daily report card section right here. You just put in the video ID and then the start time of the actual session. Now, what you want to do is you want to record your tradecraft platform. Notice it has a clock on here, just like your computer, but it goes down to the second. This is actually really important. So you record this specific screen. You can be anywhere on the actual platform, like we can be on the main dashboard. This clock will be down here at all times. So what you want to do is when you're streaming to YouTube, you record this screen. That way it goes down to the second, and then you can change the screen over to your actual charts. Put in the video ID and the start time of the recording. Really easy to do. You throw it in here, and then we can see there's some tags right here. If we press play, this video will go, it's bad quality right now. So what I'll do is I'll hit this gear icon, put it to 1080p, but it goes right to the entry of the trade. This is trade one, which is worth $900. Then if I go to trade two, what I'll do is I'll toggle autoplay on, and let's make it start a few seconds before the trade. I want to see a little price action before the trade is put on. So we'll go a few seconds ahead. Click on trade two here. So this makes the reviewing process really easy. We could see this might be trade two, so the timestamp might be off a little bit. So what I'll do is I'll actually go several seconds, and then we'll toggle on trade one right here. So there's no trade right here. And then we can see a trade is being initiated right here at it turns blue right there in this column, so the trade is initiated. So what I'm going to do is I'm going to review the video footage from Tradecraft, and then I can just come in here and just select tags. It's really easy to do. We try to make it as easy as possible. And then this is actually an A+ scalp, which we can use that tag to look at all the video footage and even screenshots of our A+ trades. We can see there is a place for screenshots as well. So this is what's special about our tagging software compared to other people out there, because when you're uploading an hour or a 3-hour session, it becomes really difficult to find the actual trade to review. So we make it really easy for you to review quickly and to tag quickly as well. Now, here's the thing. As I'm gathering statistics, right, I'm doing the review process. I'm looking at the trades. Was there a range there or was there not a range? I want to put that tag on. The emotional trades are usually better to put on during the session. I want to know if my psychology is affecting technical trades or if I'm just taking trades that aren't an actual setup of mine. The reason I want to do this, and this is really important, it took me 4 years to find consistency in my trading. However, I learned to start tagging, and I was using another platform well before we created this platform. The Tradecraft platform, at the time of this recording, is just a little over a year old, 14 months old at this point. So I've been using tagging on other platforms early in my career, and I was tagging impulsive trades. And I also had which is a psychological problem, right? And I was also tagging these playbook setups. At the time, it was called a gap jump. I was not consistent at the time. And what I did is I went into the platform and I filtered out my psychological tags, my impulsive tags. And then I realized I was consistently profitable. I looked at the equity curve when I removed all of the bad trades, and I was consistently profitable. And I was making a decent amount of money had I not been taking impulsive trades. And when you have statistics staring at you in the face like this, there's something very powerful about it, because a lot of retail traders, they guess and speculate what works and what doesn't. And what I can tell you is through the tagging process, you will be surprised about what works and what doesn't work. There are tags that I stopped using, and then when I reviewed them, I'm like, wait a second, these perform really well. So I started using them again. Well, trading's a business, and your tags are a way to know if the business is performing or not. Think about it this way. The people who make Dorito chips, they're called Frito-Lay. Different countries get different flavors, right? Somewhere in Japan, they're going to have all these crazy seafood flavors like octopus or something. Well, where I live in the States, in the South, the demographic of people here don't want seafood flavored chips. We want Cool Ranch or nacho cheese, right? So what Frito-Lay does is they sell different flavors in different regimes, because different flavors perform better in different market regimes or different areas, demographically speaking. Up north, there's going to be ketchup flavors. Somewhere near Canada, they want maple flavored chips because they like syrup. The tagging process is allowing me to see what actually performs and what doesn't. So that way I could do more of what works and less of what doesn't. Therefore, condensing my learning curve, because the reality of it is there are traders after so many years, 1, 2, 3, 4 years, there are traders who are still sitting there clueless all the way up to 10 years, and life is short. And they are still confused about what is going on in the marketplace. They don't understand what works, what's happening, because they are not tagging. Now, you may have a hunch that psychology is affecting you. However, when you filter it out and you see that you are consistently profitable, there's something very powerful about seeing that. Because with our platform, you can filter out specific tags. So I can filter out bad psychology against good psychology and see how that's performing. For example, these are all of my trades with patience. So this is ideal patience. This is FOMO, and this is where I'm kind of on the brink of it all. Notice over here it says 0. So we can see that when I am not patient, I do not perform well. That was 135 trades, and it's cost me $58,000. Okay. When I'm kind of in between, there's been 178 trades that have cost me $18,000. Now, this is 14 months of trading data, just so you guys know. And then we can see there's been 1,218 trades that have made me $537,000. And this is me being patient. Now, the raw equity curve, which what I did there was put in the raw equity curve. So this is going to include all of the impatient trades with the patient trade up here. We can see that the overall equity curve is at $468,000. So we can see it is definitely substantially further under the patient tags. So we can see how the lack of patience eats away at the overall equity curve. Seeing something like this is really important. Now, what's cool about Tradecraft is when you look at these equity curves, I have these markers I can toggle on and off. Notice how there's like a big move up right here. You can see that. So with the markers on, I can actually click on this dot. It'll take me right into the journal, and it'll take me straight to the trade. This specific trade made $15,000, and we can see the tags behind it actually. Now, you'll see that some of these trades don't have tags. These are going to be newer tags I made later in time. And right here, you can actually see the short being initiated through the video footage. So no digging this out through an YouTube archive. The trade is right there to be viewed. And then we can see the screenshots of what exactly happened. So just to go over why our platform's so fucking awesome, I just want to show you that. So filtering out specific technicals against psychology, bad psychology can mess up setups that have good technical edge, right? Or bad psychology could just you be taking trades that are not your technical edge. And overall, that's going to skew the statistics behind your performance. So when you look at just P&L, which is too broad of a statistic, you have no idea why it looks that way. Why is some traders' P&Ls good and why is some traders' P&Ls bad? Why is your P&L good on one specific day but bad on another day? You need to know exactly why. Because if you know exactly why, you have clarity and then you understand direction. Like you know what direction you need to go to become a consistently profitable trader. Just like Frito-Lay knows what's selling in specific regimes. They'll test out regimes with specific flavors, and if it's not selling in the South, maybe it'll sell better in the North. And then they got statistics and they see, hey, this flavor does really good in these specific states or countries, so we'll just sell them there. Now, the thing is, market regimes change and shift. So your technical tags are going to need different finesse in different regimes. And you can develop tags around different regimes to figure out where specific setups work out. Because in the end, edge is dictated by volatility. More volatility can make specific setups work. And when the volatility contracts, specific setups may not work at all. You need to know these things. And when you are just trading and your P&L gets spat out, the specific type of regime, the volatility, and the setups are not attached to the trades. So when you're tagging, essentially what you're doing is you're adding different little tiny statistics, different little parameters to your P&L sheet. You're adding more data to your P&L sheet. Okay, well, I took a breakout trade here. My psychology was good here. These are things that your trading platform has no idea. Doesn't know if you want to trade a range. It doesn't know if you're trading a range. It doesn't know if you're pissed off or calm. You have to manually do this process because only you know what you're trying to do and only you know what you're actually attempting to trade or not trade. And you need to log that. Every trade that does not have a tag attached to it is a wasted data point. So as you go years and years through your trading career without actually tagging, that is all wasted data. 5 years later, let's assume you didn't tag that entire time. That could be thousands of data points that you could have used to figure out specifically what you need to do and what you do not need to do. But instead, you're left clueless and guessing, and nothing will ever change or get better. Now we come down to the final category here. That would be management. In the end, you're pressing the button or you're programming an algorithm to press the button for you. The trades can be either too early, too late, you held it too long, or you didn't hold it long enough. These are things you need to dial in. You need to dial in your ability to manage well. If you're constantly seeing tags like late entries, and here are my entry and exit groups, by the way. So we have perfect entry, early, late. Entry should not happen, so this would be impulsive, essentially. Perfect exit, hold more, held too long. So if we're seeing a lot of late entries, that's telling us that we're FOMOing into trades. So we want to know that. And when we look at our technicals, specific setups we are taking may look like they have bad results. They may look like they don't have edge. But we need to know if the management is the cause of specific setups having bad statistics. So what we need to do is we need to filter out all of the trades where we have late entries. And what we might notice in our equity curve is all of a sudden this specific technical setup actually performs. It's just that I constantly get into late entries way too many times, which in turn makes that specific setup not work at all and kills the P&L. So now I have clarity on the fact that I need to start timing my trades a little bit better. And if I start timing my trades better and I stop getting in late and I actually get in on time, we might start to notice the specific technical setup we're taking actually starts to yield positive expectancy. This is the problem with general statistics. Other things can be influencing other things. Your psychology could be affecting a specific setup. Bad management could be affecting a specific setup. A combination of bad psychology and bad management could be affecting a specific setup. It might be just bad management that's affecting the specific setup. Is it too early? Is it too late? Is it an entry problem? Is it an exit problem? Am I revenge trading a lot? Or am I tilted most of the time? We need to narrow these things down. And we need to figure out where the highest sample rate of things are that are hurting us so we can stop doing those. Now, when it comes to these three categories, in the end, predicting the future on the market is pretty insane if you think about it. There is an element of luck and randomness when you do get into a trade you would consider that has edge. In the end, you're really not in control of the market at all. You can't control the market. You are at the mercy of how it's ebbing and flowing. However, the one thing that you are 100% in control of is your psychology. Now, you have these emotions that you are 100% in control of. Now, it's a skill to master the emotions, but you're in control of yourself. And if you can get your psychology dialed in, that can be the difference between being consistently profitable and not for some of you right now, depending on where you're at in your journey. Just like when I was 4 years into my trading, I realized psychology was the problem. I was taking impulsive trades. Stop doing that, which seems obvious, but until you actually filter out your trades and see, hey, I'm actually consistently profitable and I can make several thousands of dollars if I just remove these emotions, that's powerful. Now, management is a bit tricky because you are at the mercy of volatility. And as we talk more in depth about management, you'll start to see how nuanced this is. And management really is a skill. It's like throwing a baseball or hitting a baseball with a bat or shooting a basketball into a hoop. It takes a lot of practice to really dial in your management. And as far as technicals go, some things do have edge, technically speaking, and some don't. Even if our management and our psychology is perfect, we need to know that. Because in the end, we are searching for edge, which the edge can come from one of these three things. It actually comes from a combination of all three of these things put together. Good management and good psychology will boost the statistics on specific setups. Bad management and bad psychology will detract from specific setups. However, if management and psychology is good, there are just certain setups that don't work. We need to know that from a technical perspective. So you're going to be constantly filtering these things against each other to figure out what direction you need to go. And that ultimately creates clarity, which leads us into the first tag, my read on price action. So what this group means for me, and this is just the most important tag just below P&L, because for a lot of you guys, P&L is the most important thing, right? That's telling if you're making or losing money. The problem is you could be making money on bad trades, but since the P&L is good, you're fooled into thinking that what you're doing is the right thing. But in reality, you could have made money on a FOMO trade, and that's not good. So there are times where you can make money on tags, psychological tags that are bad. You need to know that because you just got lucky at that point in time. And if you're unaware, you'll think that luck is you doing something right. So every time you sit down and you pull up your charts, the market opens, the regime from a day-to-day perspective can shift. Market regimes or market environments, the amount of volatility or the volume flow coming in can shift on a day-to-day basis, a week-to-week basis, a year-to-year basis. When you sit down, are you clear about what is happening in the market? There are times where you're going to sit down and you have no read on it. That means you are absolutely confused. There might be moments where you sit down and you can predict every rotation. That means you are clear. There might be a moment where you're kind of predicting rotations, but sometimes you're not. You are in between clarity and confusion. Now, assuming you sign up for Tradecraft, which there is a free version of it, you get 3 tags. I recommend you use these 3 tags when you give our platform a test drive, okay? When you get the free version of it, you don't need to put a credit card in or anything like that. And you get so many trades you can use these tags on. See what happens over time. Edge ultimately comes down to clarity. How clear are you about the market regime? If you are clear about what is going on, you should perform really well. Now, with this specific statistic, here is my clarity tags. This is the overall clear, confused, and in between tag here. So as we toggle on the markers here, we can see that when I've been clear, I've taken 842 trades that have accounted for 489,000. When I'm in between clarity and confusion, there's been 273 trades minus 10,000. And then when I'm absolutely confused, it's cost me $91,000 at 102 trade sample size. So when we throw out the equity curve, we can see that our lack of clarity drags the overall equity curve downward. Whereas if we're completely clear, every time we're initiating a trade, the performance is boosted substantially. I mean, look at the distance between here and there. Now, universally speaking, between me and 4 other traders, we have used the same exact tag group, clarity. And our performance all looks exactly the same. And what I mean by that is our clear trades perform. They're above the $0 line. Our in-between trades or our confused trades are generally below the $0 line. So this is my specific statistics. I have a student, his name is Chronic, who I'm attempting to turn into a consistently profitable trader. He's using this same statistic. Let me show you his journal so you can see the same exact tag. Now, this is his journal. Now, there is an issue here, and this is one of the nuances to tags. You guys are going to be creating these things at different times. And when you're creating tags at different times, what it's doing is skewing your sample size, and this can in turn skew statistics on what you're doing. So one thing you want to do is if you're creating tags at different times, where it says trade number here, we're going to go to date. And when I click on this date, notice that the yellow tag was created at a different point in time. Chronic first started using these tags in December 4th, 2024. Right here, he's created this tag and started using it March 3rd, 2025. It's important that when you're using your tags, you're consistently using specific groups on every trade. So every single trade is getting one of these 3 tags. So we can see there's a bigger sample size up here. He will have far more trades on the confused and clear side than he will in between. So what I want to do is actually do a page filter. I'm going to put on date, add the filter, and then I want to go to March 3rd. So we'll come down here, click on this, March 3rd, 2025, and then we'll filter it out till today. So as we can see, the yellow line now starts with the green and the red. And then I can go back to date up here and then select trade number. So what we're doing is we're essentially getting rid of some of the sample size on here. So that way all three of these tags have the same starting point from a date perspective. Little things like this, again, can absolutely skew your statistics. So we can see that he has 381 clear trades where he made 9 grand. His in-between trades cost him 3 grand, 3,600, and he has 233 trades. And then down here, he has 205 trades that cost him $11,000. So what I've decided to do is take my clarity tags and those statistics and put them on top, and below is chronics right here. So same tags, different traders, but you have the same pattern where the green goes up, red down, and yellow is in the middle. Now between us and a few other traders, their curves look exactly the same. Now here's the difference. Notice that his red and yellow, when combined, have a higher sample rate than his greens. So what I'll do is I'll hit this copy button up here, and I'm just going to create another widget somewhere. We have this 123 widget, or 123, and then there's a clipboard here, so it's going to take the same filter and just apply it. Now we can see the actual totals here. We could also come down here and we could do the same thing with a pie chart, just so you guys can see that. So there's the pie chart. You can see that on the pie chart, more than half are red or green just at first glance, but this is going to be more valuable of a statistic because it has the widgets on it. So if we combine the in-between and confused here, 233 plus 205 is 438 trades versus 381. So we'll subtract the 381. The difference between these two tags, which I consider bad, is 57 trades. So he's taking more trades where he's not completely clear than he is clear. And because of that, it eats away at his equity curve. Whereas if you look at my equity curve here, there's 842 trades here, 273 in between, and 102 confused. The difference between my clear trades and these two tags is 467. So I'm taking more trades that I have clarity about the market regime than chronic. So as you can see, this yellow and red eats away on your total, on your raw equity curve, and it's very apparent on chronic statistics. And you'll see this on specific statistics like this. You'll see one equity curve rising up and another one rising down, like this red one. Well, actually, both the yellow and the red one in this circumstance. And they are neutralizing each other. So the red and the yellow are neutralizing the green. Thus, he's not consistently profitable. He's actually losing money. And the thing is, he needs to just be more clear about what is going on. Now, here's the thing about clarity. If you've not experienced a specific market regime, like if you've not traded the COVID pandemic when the VIX spiked really high, the liquidity all disappeared, you're not going to trade well in that environment. If you've not experienced incredibly low volatility environments, you won't trade well in that. As a new trader, there are going to be new regimes that you've not experienced. And since you lack experience, you're just not going to trade them well. It is through multiple years of trading and have gone through these regimes multiple times that as the regimes shift, which they can on a day-to-day basis and even intraday, right? Think about FOMC. Before the FOMC minutes, the market's usually calm and then volatility can pick up. That is a regime change. You need to be clear about the regime and how to specifically trade it. I have substantially more experience trading than Chronic does. So naturally, my ability to clearly read what's going on is going to be higher than his. If I was a newer trader, it would look more like Chronic's. Maybe worse if I'm brand new, where I have no idea what's going on and I'm confused all the time. And that's the thing. If you're a newer trader, you'll notice that it could take you a week or a couple of weeks or a month to figure out a regime. You start trading really good for a few days, and then before you know it, the regime changes, and then takes you another few weeks, a month or so, then you start trading well again, and then all of a sudden the price action seems to change and something's different. Setups don't seem to be working anymore. And you'll always feel like you're one step behind. This is because you lack clarity with what is going on, and you may not have enough experience to understand how to trade that new regime. Now, there is another way to boost our clarity statistic, because if we can boost our ability to read the current price action, we're just going to trade better. After all, edge is about predicting what's going on. And if we can clearly predict little micro movements, little rotations on a consistent basis, then we are clear on the regime. We have our finger on the pulse of the market. Therefore, we're just naturally going to make better decisions. The way to boost this is by tagging and gathering statistics on your tags, filtering out those statistics, and seeing what actually works and what doesn't. When we know exactly what setups work, when, what's hurting us, and we start working towards fixing those things by looking at our actual statistics or tags, we naturally are boosting our clarity on what works for us and what doesn't, versus the 99% of you who have no fucking idea because you don't tag. So you don't really know what's working and what's not. So you don't have a clear direction on where you need to go. Sure, you might be clear about a specific regime, but as the regime shifts, are you able to adapt to it quickly? Which, in order to do that, you need experience. However, you have no direction because you have no tags. And without those tags, you can't be clear on what direction you even need to go, and you're trading to be consistently profitable. This is why most retail traders are fucking losing. It's because you have no clarity in your direction, and you are trading regimes you are not clear on. Tagging and experience will boost your clarity. If you notice, look at the angle of attack from the starting point on my clear trades versus chronic. Notice how his yellow and green kind of converge, but his green clear trades, they're at a more shallow angle, whereas my clear trades start to increase in angle of attack in certain areas, right? There seems to be this more parabolic look to my equity curve, right? It starts off at a more shallow angle, and then it bumps up, and then this second little lump of angle of attack goes up, and then it seems to create this consistent attack. Yeah, there might be these little dips and stuff in it. That's because as I'm tagging more with the platform, I'm seeing clearly what's happening. I'm able to make better decisions, and I'm getting more experience, so the angle of attack sort of goes, and then I'm making less trades and environments where I just have no read. I'm like, I don't know what's going on. So I'm making less of those terrible decisions. You shouldn't be trading when you're fucking confused. And therefore, since I'm making less confused trades, they're not eating away at my total equity curve. So therefore, I am consistently profitable because I am trading when I have a good read on the market, not when the setups are there, because certain setups don't work in certain regimes. I'm making trading decisions with good setups in regimes where I can clearly read the flanking price action. See, a lot of you are taught, put the setup on no matter what. You shouldn't do that, because if you don't understand what is going on and you can't predict small movements before the setup, then you don't really have a clear idea of what's going on. So when you put the setup on, it just doesn't work because your ability to read the current regime is not there. So therefore, the setup may not work. Clarity boosts the edge of your setup, because if the volatility is contracted, then you'll know that you can only get maybe 4 ticks in this environment. Whereas if the volatility expands, maybe I can get on average 20 ticks, assuming you're scalping. The problem is, if the regime contracts, the volatility contracts, and the specific day type is mean reverting, and you're not getting a lot of breakouts, and the prior day breakouts were working, and I was averaging 20 ticks, all of a sudden, every trade I get into on the next day is going against me because I'm trading a breakout strategy that's not working today, because today is a mean reversion day. And the mean reversions are only yielding 4 ticks on average. So assuming I do get a breakout trade today, it may not run 20 ticks in my favor. Therefore, I don't have clarity on the regime. Therefore, I can't make the management adjustment to know what technicals I should be employing at this point in time. Therefore, if I'm employing specific setups in a regime that I'm not clear about, those setups will not work. So from a statistical standpoint, those statistics will not perform. And at first glance, I might be like, oh, well, there's no edge here. No. Were you confused? And confused and clarity, I would consider a psychological tag, not management, not technical. I would place it in the psychological area. If you are taking setups when you have no idea what is going on in the specific regime, we need to filter out those confused trades. We need to see what is working when we're clarity, because clarity will boost the performance on our technical trades. However, even though we're clear, we need to make sure our management is well, right? We need to make sure that we're not holding too long, because if volatility contracts and we're seeing a lot of hold more tags, well, that's telling us the volatility is not there. Volatility dictates your P&L. Look, you're not getting 50 tick layups if the volatility is not there. It's just not going to happen. If we're seeing a lot of hold more tags on our exits telling us we need to hold more, then that's telling us volatility is expanding, so we need to start holding more. So depending on how our exit tags look at any given time will let us know if we need to push the trade or start cutting it sooner. Kind of like the MAE, MFE stat we sort of looked at the beginning of this video. Now, clarity, much like P&L, is a broad statistic. Now, here's the thing about clarity, and this is how you guys are blowing up. When you are sitting there and you have no idea what is going on in the marketplace, and you've sat there for 30 minutes, you haven't taken a trade, you start to become what? Impatient. And when you start to become impatient, you take a bad trade. And then if you take a bad trade, you might look at your P&L and you're not happy. You are no longer content. Therefore, you might attempt to revenge trade in order to fix that bad P&L. Therefore, you're going to take a revenge trade, a setup that's just no good, right? And then that trade doesn't work out. Then you start to get tilted. And then you start to just take bad trades after bad trades. And you are completely confused when you are doing this. The thing is, as I stated earlier, clarity makes the difference. If you are new and you are not clear about what is going on, you need to be on a sim and you need to tag your sim trades until you start to gain clarity about the different regimes and you know where you need to go. No point in pissing money away on combines if you have no idea what is going on in the regime and then you start trading regimes you don't understand. It takes a moment to get clear. There's a lot of times where I sit down and I just don't have a read on the market. It takes me about 40 minutes to gain clarity. So the one thing I need to do is start checklisting things. So one thing I'm going to do is there is a checklist. Now the checklist is created through a bunch of nodes. We have tutorials on it. Mine's is kind of complex with specific filters. So let's run our checklist. So let's say I have no idea what is going on in the market regime. The moment I sit down, I don't know what's going on. It takes me about 40 minutes before I figure out what's going on average. This is a statistic we'll look at later in the video. What I'm going to do is zoom in on it so you can see it better. So I'm sitting there, I see my setups or whatever. I'm like, I'm going to go for a breakout trade. So I click on this breakout and I want to know, as soon as I got in the trade, did it go against me immediately? Yes, it went against me immediately. And it went against me about 8 ticks. So 8 MAE. Now, this is MFE. So how far did it go in my favor? Let's say it didn't go in my favor. So now it's asking me, did it win? And it was a breakout. So we're going to put loss on breakout. Notice it's counting right here. Let's say I'm sitting here, another minute or two goes by. I try to pulse check. So I should clear this up. This isn't me actually trading. What I'm doing is I'm taking mental trades. So I'm looking to see if I can get into a trade, or I'm just attempting to predict rotations, okay? This is going to work a lot better if you're a scalper than somebody that holds trades and you're picking up 1, 2, 3 trades a day. This is going to be a little more difficult for you to gain clarity. But if you're scalping or take trades frequently, this is going to be rather helpful. For those of you who do more long-term stuff, maybe you can take an idea from this. But this is how I gain clarity. So I took a mental trade. I'm not actually going to take a trade. Even if I thought it was a good trade, I'm not risking taking it right away, because I can tell you something. There had been a lot of periods in my trading over the course of this last year and even the years prior where I would immediately start taking losing trades, but then I would turn the session around. And this would continue to happen where I would start taking losing trades right off the bat, session would turn around, and then I could actually pull a green day. Well, for me, I would like to just prevent taking bad trades right off the bat. This is where this checklist procedure is extraordinarily helpful. Checklisting trades with the checkmate. That's what we named our checklist. If you can see, it says checkmate by Tradecraft. So as I refer to checkmate, that's what this is. This thing is crazy. You can build simple checklists. This can tag for you as well. So if you want your checklist to tag trades, it will do that. You can attach images to it. So you can build simple checklists all the way up to full-blown trading systems in it. I don't think enough of us have our trading systems written down. We're not checklisting our trading systems. So as you tag stuff and you gain clarity on where edge is, you want to start to build an actual system around it. So this can be super simple or very complex. It's up to you. Now, going back to this, let's say I take another trade and it's a breakout trade. I'm like, my intention is a breakout. And then the trade immediately went against me 2 ticks, but then it went in my favor another 2 ticks. But then it sort of went against me 8 ticks. So what I would do is I would hit this arrow and go back and say, hey, it did go against me 8 ticks, actually. And then it went in my favor 2 ticks overall. But the breakout was a loss. Now, there's this tab here. I'm going to hit this. What it's doing is it's building a narrative, and if I expand it, it'll show you the sequence of how I went through the checklist. But since I'm hitting repeating answers, since I hit loss, it's not going to print it twice if this is collapsed. It'll say twice on it. So if I want to see the actual order of how I'm doing this, I want to expand it where you have infinity view on. So we can see the first mental trade I took was a breakout. It went against me 8 ticks immediately. It went in my favor 0. It was a loss. I tried it again. It did work in my favor 2 ticks, but overall it went 8 ticks against me. That is twice where the trade idea had gone against me over 8 ticks, and it was another loss. So what this is starting to tell me is like you might need to start fading stuff. So what I'm going to do is hit the fade. That is the intention. And then it goes against me immediately 2 ticks. And I'm again taking a mental trade. So I'm watching this and I want to trade it like I really would. And then all of a sudden it goes 8 ticks in my favor. And it was a win fade. So as I'm doing these mental trades on these rotations, whether I actually want to take that trade or not, right? Now, I would say, personally, for me, I want to mentally trade actual good setups, not attempt to predict every rotation. I'm willing to sacrifice actually taking these trades right off the bat just to see if I have clarity. Obviously, the breakouts would have lost me over 16 ticks. So I would be hurting if I really did take those trades right off the bat. But instead, I'm okay. And I can tell you most of the time when I sit down, I have no idea what's going on. It takes some time for me to figure it out. So assuming that I was winning these breakouts right off the bat, then that's telling me I'm clear. And typically I want to get about 3 trades in where I'm seeing wins. And as I tag the MAE and MFE, that's telling me how far on average I could potentially hold the trade. And this is starting to tell me I can get about 8 ticks on average right now. So that's what I want to start going for. Now, the average MFE on a lot of these trades, it might be 2 because there's no volatility, or it could be 16 plus, where it's just more. Now, notice the fade says, did it overshoot? Sometimes when you fade a level, the price action goes through the level a little bit and then comes back through. So did it overshoot? It kind of did by 2 ticks. So I want to know that information. Now, notice when I click yes, it says yes on the overshoot. The way the checklist is put, if I click no, it just doesn't even show that answer in the summary. Again, you can do trick stuff where certain numbers don't show up. Depending on how you finesse the checklist, it'll delete or just not show specific narrations or information you don't need to see. For example, if I click this fade, This favor and against, did it go against me right away or in my favor right away? These actually don't show up. I just need to know how many ticks. So it's showing up right here, right? But the moment I click this it goes away. Because I don't really need that information. I just need to know if it was right away or not. And if I see MAE over MFE, I know it went against me right away. If I see MFE on top of MAE like this, then I can tell that it went in my favor right away. Sometimes it'll go right in my favor that there is 0 MAE on it. So this checklisting process actually boosts clarity because I'm putting my trading system or my ability to get clear in this specific checklist on the regime into my workflow. So this process allows me to make sure I'm clear before I'm actually putting trades on. Therefore, I'm not down 16 ticks right off the bat. And I can tell you Chronic's lack of performance and clarity is because he does not do the pulse checking or this checklist process nearly enough. The moment he starts doing this, he gets good performance. Same for me. So this is a solution to the problem. Now, you might sit there for 30 minutes, an hour, and you have no idea what's going on. The best thing to do is just not take a trade. Alrighty, guys. So the next thing we're going to do is we're going to look at all of my tags, the statistics behind them. We're going to look at the last 14 months of my trading. I'm recording this in January 2026. 2025 was my first full year on the platform. Why are we looking at 14 months? Well, Tradecraft was first available for tagging in November 5th of 2024. So I never got a full year on this platform as we were developing it. So we're going to look at just 14 months. And through a full year of trading, there's quite a lot of interesting things I've learned. There are tags I think you should be using. And I'm going to share with you where a lot of my edge is being derived from. Now, one of the first things I do recommend is having groups of trades. So when we look at our tags, we can see we have all of these groups, right? We have the range tags, and you can move these around and it'll redisplay. So I just rearranged everything according to this technicals management psychology. Here we have the ranges on the multiple time frames, which I've already explained. Next, we have something called waves. So what waves are is when you're looking at a 30-second chart or any chart in general, the market kind of moves in this wave-like fashion. And I want to know, am I going on a breakout with the wave or against it, I should say? If the wave of the rotation, it's like rhythm, I guess you could say, is the rhythm or the wave on a downstroke, so it looks like the rhythm of the market is going down. Am I going up into it? If so, I'm going favor. So I'm trading into a potential rotation point. You can think of this almost like ranges. However, ranges might not be present at that point in time. So am I getting in with the average rotation on the 30-second chart? Am I fading it? Am I breaking out? Am I in the middle of a wave, or is there none present? So this would be like a very dead, low volatility environment. So you can see these all seem similar. Now, typically green means good, red means bad, right? A few years back, I used to be really good at mean reversions and I sucked at everything else. Something has changed. I am good at breakouts. We'll see that. However, these tags all kind of look the same. As far as the color coding goes, I'm either going into something in the middle of something, against something, or that specific condition is not present. Shimmy entry has 3 different names. Favor shimmy, slip favor, or reclaim favor. I have a video called Slips and Reclaims. I will put it in the description of this video so you can go watch it. It is very relevant. This specific tag has a lot of source of edge, and it boosts the statistics across all of these. So trading into a favor shimmy between me and my student Chronic, there is statistical edge for us on that green tag right there. So what happens is on a small time frame, a 3-second chart or something like that, there will be these really hard moves like very sudden, very momentous. It creates a vacuum. Am I fading back into that vacuum? If so, it would be that green tag favors shimmy. Am I in the middle of one of those vacuums? Am I going against it, or is it not present? If it's not present, that's telling us volatility is low at the time. This type of entry, it's an entry condition, right? For the most part, these types of entry conditions are always present, especially during the open. Next, we have these things called 3-second convergence and 30-second convergence. Basically, what I'm looking at is a lot of cumulative delta, and I'm looking at these delta flips. Now, I'm not going to try to explain all of the little nuances of my specific trading, as the video is focused on tags and how can we extract edge from the tags. But what I'm looking for is multiple factors of support. So notice this MFS tag right here. This stands for multiple factors of support. I notice trades with MFS outperform trades that don't have MFS. And let me show you. So what I'll do is I'll just create a new equity curve here. We'll make 2 of them. So we're going to put on this MFS tag, which I haven't used for the entirety of this platform since I first started tagging. So when we look at MFS, what we need to do is go to date. We'll toggle our markers on, and we can see the first date is June 18th. Notice how I started using this tag a lot later compared to when I first started using the tagging software or the journal. So we need to go to June 18th and filter it. So I'm actually going to do it on a widget level. Filter. So date, June 18th. And then we'll go up to this point in time. I did something wrong. See how it's throwing out that message? It's because I didn't go to 2025. There we go. Notice they're both starting at roughly the same point. I'm going to actually make this color a little bit easier to see. And then we're going to make the, actually we'll make it green. So this is multiple factors of support. This will be red for no multiple factors of support. Now I'm going to toggle this back to trade number. And what I need to do is actually physically filter out, which is something I've been referring to a lot in this video. I need to filter out the multiple factors of support trades because that red equity curve right there has multiple factors of support in it. So the way I do this is I click on this twice and it'll cross it out, and you can see that it is now filtering out multiple factors of support. So notice how multiple factors of support substantially outperforms no multiple factors of support. In fact, no multiple factors of support is relatively flat. There was a few outlier trades, like really big wins, that boosted this equity curve. But for the most part, not having multiple factors of support isn't good. I need it on every trade. Now, between Chronic and I, we have similar results. When he has multiple factors of support on, he performs better. But the question really is, how many factors of support is the sweet spot? Is it 1, 2, 3, 4, 5? What is it? So as we go back into the tag setting, I'm using these levels called delta flips. It's my own style of trading. And there's a bunch of conspiracy theory and all sorts of stuff behind why I do what I do, but it fucking works. So I'm measuring these on the 3-second, and I want to know how many factors of support am I getting on the 3-second. Is there 0? And then all the way up to 8. If there were 9 factors of support on the 3-second chart, I would need to add a new tag, but so far I haven't encountered that. Same with the 30-second chart. How many factors of support am I getting? So far, I've only got a max of 5. If I got 6, I would add the tag. Now, what I do is I combine these. So far, I've found the sweet spot is 4 factors of support. So if I had 2 here, that would equal 4, so I would click this. So I would click 2 here, and then 4 here. If I had 1 here, 3 here, it would be 4, so I would click 4 here. So this is totaling up the factors of support on the 2 different time frames. Next, we have time of day. I would consider this technical. Open window means the first and last 10 minutes of the session. Closed window means outside of the first and last 10 minutes of the top of the hour. Open, close, and closed open is when I go in transition between the first and last 10 minutes of the session. So I might be in a trade that sort of transitions into sort of the top of the hour area. Next, we have 0 MAEs. These are trades that worked immediately in my favor. The theory is the best trades work right away. So any trade that has 0 MAE or 1 MAE, I tag how far it would have went before it came back on top of my entry, not where I exited the trade. The entry worked right away. How far would it have gone? And how far would it have gone before it came back to my entry? I want to know if the best trades really do work right away. Next, we have these random management tags that actually do have some technicals in it. So as you probably notice, a lot of these tags are in groups. I recommend doing groups and doing exclusive groups. So that means you can't hit more than one tag at the same time. It would make no sense that I'm doing a mean reversion trade and a breakout trade at exactly the same time. That just doesn't work, right? Same with like psychology or something. My patience, I'm patient and not patient at the same time. That's impossible. I should only be able to select one tag. So when you have the exclusive check on, that means you can only select one tag in that group. So I recommend making families of tags or groups. And I want to make sure that I'm like always selecting a tag on every trade as I'm gathering data. Like, for instance, 0 factors of support. I need to know that. The range is not present. I need to know that. I want to be selecting one thing in each of these groups because I want to know, does a range matter? Do I trade just fine without ranges being present? And if a range is present, how much edge is there for me? So the tag groups are designed to where I'm always ticking something. Other than this one is a very interesting one. This has very random stuff in it. So you have fractals. So this is a pattern. Pretend you have a wedge pattern on a high time frame and a low time frame. And I take that trade. So it's a wedge and a wedge on 2 different time frames. That would be fractal. That type of condition doesn't show up very often. So that's kind of a, I'm just going to put that on once. Lost data. What this is I didn't record the session or my recording got messed up. I still need to tag the trades. And the reason I have lost data tags is because my overall P&L will be displaying a large number, but some of those trades I may have not actually done the review process or I didn't tag anything. So I want to filter out stuff I'm not tagging. And for the most part, I always tag. There's the very occasional session where the recording didn't turn on and I couldn't review the session. So I would put this lost data on. So that way when I'm running filters, I can just say, don't show me lost data trades. So that way they get filtered out. We got retry 2 and 3, and this has an infinity symbol on it. Do back-to-back tries make your trading worse? Do you statistically perform better on the first try versus the second try versus the third try? Typically, if you're retrying the same setup multiple times, there might be psychological issues or just the setup's not there. But for whatever reason, you're married to the idea of it being there. So how does doing multiple tries impact your performance? And that's something we're going to actually look at. Flip hits. Am I long and then am I going short? Am I short, then I flip long? So flipping direction, how does that affect my trading? Now, fixated on an idea. This is getting married to a trading idea, and you're just kind of not looking at the market information anymore. You have an idea, the market needs to go in a specific direction, and you're just like, you're set on that idea. I need to know that. Giving up, this means most likely I'm getting my ass kicked or I'm revenge trading, and I don't care. I'm just putting a trade on, hoping it works. That's me giving up and not like trying to actually trade well. Impulsive, obviously, everybody needs that tag. Didn't see a pattern. So this tag only works when you do a review session. When I review my sessions, oftentimes I'll be like, oh my God, I didn't see that pattern. I should have known about that pattern. This is where the checklist would help you see the pattern. So a checklist can prevent you from skipping over something that's important in your trading process. There are times where I should know better. I shouldn't be trading something, or I should trade something, and I just didn't see the pattern. So I want to know about that. And the only way to know about that is when I review the recorded sessions, not gathering information. This is me intentionally getting into trades without like trying to figure out the narrative, the context. I'm just taking the trade without like really analyzing everything. We have revenge trade. Obviously, we know what that is. That should be self-explanatory. Mistake. Sometimes you accidentally click the button, right? So when I put a mistake trade on, I don't tag anything else. I don't tag ranges. I don't tag multiple factors of support. This mistake tag only goes on when I make a mistake. That is just a piece of data that I don't want in my library of data. So I want to filter out those trades. Distracted. Am I just talking to somebody or something when I put the trade on? Outlier. This is a very important tag. In fact, I think all of these tags here are all tags you guys should be using. So the reason outlier is important is sometimes you take a trade that is abnormally large in the loss or the profit. And when you take a trade that is just bigger than normal, like I scalp, so there is an average amount of P&L I'm usually bringing in, right? There are times where I take abnormally large losses or abnormally large wins. I want to tag those with outlier. The reason being is one of those large losses or wins can skew your statistics. So there might be a tag like let's say it's a range tag. I might look at it and go, oh my God, it's lost me 10 grand. But it turns out it's down 10 grand because of one large loss. And if I just filter out that outlier tag, all of a sudden that range tag actually makes money. What you got to really understand is a lot of things are affecting other things in this ecosystem. So this is why looking at statistics at first glance is never good enough. We obviously have the A+ scalp and A+ hold. We want to know what those trades are. There is a playbook widget in here. We can just throw those tags on and quickly look at them and see the screenshots and videos of all of those trades really quickly. Multiple factors of support. I was running this tag for a while, noticed it was performing, and then I began to think, I need to narrow this down. How many factors of support? So these tags up here are a bit newer, less sample size, but I still run this tag even though I'm using these. Double R, this is a very nuanced setup. This is much like this shimmy trade here. Am I trading into a hard move? If I'm trading into a hard move on the price action, the cumulative delta likes to retrace. So I'm looking for these really hard moves in the delta as well. And if I can get the delta to align with one of these entry types, it's called a double R. This tag has phenomenal performance. Then we have the Rabo. This is a reclaim assisted breakout. So if there's a hard move and then there's this like textbook range, oftentimes the range will break out and that reclaim or that vacuum will help suck the trade in. This is just one of these like playbook setups that works really well. This is just such a defined play for me. It has its own name. So you can name your own playbook setups and then generate tags for them. Then the 3-minute play. So over the last few months of 2025, I started using more high time frames with multiple factors of support. So I started putting these tags on to see how well higher time frames were affecting me. So this is a mix of management and unique setups that sort of don't have any groupings. And this is not an exclusive group, so I could select all of these tags if I wanted to. Next, we have entries. These are tags all of you should be using, okay? So I think you guys should use every tag in this group other than the Rabo, 3-minute play, Fractal, and Double R. Everything else I think you should use. And then I think you should be counting the actual multiple factors of support. Confliction is when I'm going into, I'm trading in the middle of several levels, so it's conflicted. There's just too many factors of support, but they're really close on both sides. So we have entries, exits. You guys should have every one of these trades. Perfect entry, entry early, entry late, entry should have not happened. That's up to you. If the entry should have not happened, I'll put this on and then I'll put impulsive on. Sometimes I won't tag the exit because if it was an impulsive trade, it just like, what does the exit matter? Why build on the statistics of a good exit, hold more or late if the trade was impulsive? So there are times where I will not tag exits if it's just a terrible entry. So you have perfect exit, hold more, held too long. You're going to want these at all times. Then we have trade intention. Am I being conservative or aggressive? This has to do with scalping versus sort of holding. Aggressive trades are me attempting to hold. Conservative trades are scalping. But this is more of a based off of time in the trade or duration. The longer I'm holding the trade, the more aggressive it is. If it's a really quick trade, sub 1 minute, it's most likely conservative. So I want to know how these stack up. Obviously, we have clarity, which is important. Everybody needs that. Going back to trade intentions, I recommend you have 3 tags in this group. If I was to redo these, I would redo them. I could probably rename these. That's what's good about our platform is if you want to rename a tag and not lose the data attached to it, you can do that. Other platforms, you can't do that. So all you do is hit this edit icon, this pencil, and just rename it here. And then all the data will still be attached. But if you're going to have something like this, put in scalp, point to point. So this is kind of like between a point, between a scalp and a hold, and then hold. So scalp, hold, and point to point, which are trades in between a hold and a scalp. I would do that if I were you guys, just to see where you perform better. Are you okay with the P&L? So this is content. So am I actually okay with the P&L? Let me rearrange these. Are you getting upset? So this is tilt. And then this is patience here. I like to phrase them as questions. Personally, some people like to just put 1, 2, 3. These are daily tags. So these specific tags, if we look at the pencil icon, it says day type. So there are times where I sit down and I just feel rushed because I have to go somewhere or talk to somebody or do something. I feel rushed as I go into the session. And when you filter these tags out to day type, if you take 15, 10, or 5 trades during the session, every one of those trades will inherit this tag. And I only put that tag on one time. Nightly hypnosis. Am I listening to a hypnosis track at night? I don't need to individually tag all my trades with this. So to save you guys time on specific stuff like did I work out? Did I get good sleep? You want to have them as a day type tag, not trade. Trade will be defaulted on. So I just select this once and it'll hit every tag no matter, or it'll hit every trade no matter what. These are newer tags that have no statistics. I'm going to retire a few tags, and I'm starting to design my new tags. Breakouts and fades. This is stuff I want to know. Was my intention a breakout or fade? I really want to know that statistic. Compression, need more of this tag. So this is just a placeholder. You can see, so there's nothing here. Also, you can, if you notice your tags have specific combinations that work really well, because there's going to be specific tags that have high probability. You can create a playbook, and what you do is you put those individual tags in there. So if you're tagging during the session and the setup shows up, it'll say, hey, this is an A+ long. So for example, let's go in here. So if this, and this show up, so notice this A+ long will show up right here. Look, so it goes A+ long, right? Let's say this condition is not present. The moment this condition is present, it says A+ long. Now I can hover over it and notice it's selecting 2 tags in the micro mean. I can only select one or the other. That's an exclusive tag. But if either one of those conditions are present, this would be an A+ setup. And what I can do is calculate the statistics when these conditions are present live. So what I would do is I put the checkbox on because I just want to calculate these 3 right here. So when you put a checkbox on, it will calculate other tags. So calculates tags. So far I have a 38 trades of this tag combination, a 58% win rate. And I think this is currently bugged out right here because it says my average trade P&L is 16 bucks. So I just flipped it on this one, and average trade P&L is 528. So it is not bugged out. Our total cumulative P&L is 3,100. Win rate 100 on a 6 sample size right here for trades. So if you're noticing you have specific tag combos that just lead to A+ setups, you can get them to where they're up here and it'll display a message when that happens. Now, there's something else up here that everybody has access to. It's the rating. It's going to be either a 1, 2, or 3-star rating. This would be a management tag, in my opinion. You can filter out stuff with your rating. So for me, a rating of a green star is going to be a perfect entry and perfect exit trade like this. Okay. If I have an early entry, it'll be a yellow star. If I have a perfect entry and I held too long, it'll be a yellow star. If the entry was early and I held too long, it'll be a yellow star. If the trade should have just not happened, it goes down to a red trade. So this 3-star rating allows me to figure out if it was perfect management. I needed to adjust something in my entries, exits, or the combination of the both. So that's telling me the setup is there. There's a setup I should be trading, but my management's a little off. And red star is impulsive trades. Here we can see the rating system. So these are the stars up here, which can be filtered. Notice it kind of looks like the clarity and confusion tags, but notice that I have far more yellow trades and red trades than I did on the clarity versus confusion. Now we can see the yellow trades are above the 0 line right here. So we can see that, hey, my, a little bit of a management issue here and there, I can still perform, right? Perfect management is really tough to achieve 100% of the time. I think it is almost impossible. So naturally, you're just going to have yellow stars. And then we can see the red stars are absolutely eating away at our overall equity curve. If we throw a raw equity curve up, this combines all three of these. We can see that between the yellow and the red, it does make the angle of attack less. Now, what I've done is I've taken another trader rating statistics. You can see it's just like mine. This is not chronic. This is a different trader. But this is one of those statistics that if you use the rating the way I'm implying, which this trader is, you're going to notice the same sort of theme. Greens will go up, reds go down, yellows kind of sideways. His 0 line is here. Notice how he has far more red trades than green and yellow. And because he has so many reds, he's taking so many impulsive trades. This is destroying his overall equity curve. So if he just stopped taking impulsive trades and was just left with trades that had a little bit of management issue and his green stars, he would be consistently profitable. This specific trader has made payouts on combines, so he does have some profitability going on, but this is absolutely wrecking him. Now, if you look at mine, the red is the least amount. So one thing I recommend you do is you take all of your groups, and then what you do is you plot them as equity curves. So you just make little families of equity curves like so, right? These are all the different groups, and these are the equity curves of each of the groups. Now, we'll start with our range trades here. So over here on the left, we have the higher time frame ranges, in the middle, medium ranges, and then over here, micro ranges. Now, what you'll notice is I did not put in the none tag, so the tag for no range is present. I'm not really interested in seeing that in this specific equity curve because it will dominate. I can already tell you I take way more trades outside of no range. So if there's, and I'll just kind of show you an example here. So we'll put them on in each one of these categories. So you can see how the gray line dominates, and it just makes seeing the other conditions more difficult. So personally, I elect not to do that. So I will remove them because I want to know what is working better. Is a breakout working better? A mean favor working out better? What about trading in the middle of a range? Is that working out better? So you'll notice that here the breakouts of a higher time frame perform really well versus mean reversion. But for some reason, there's an abnormally large loss right here. And if I click on it, it'll take me right to that trade, which I lost $10,000 on. And I believe this was before videos and screenshots were available for the journal, so we're not going to see it. So as we go out, this is where removing outlier trades really matter. Notice our mean reversions on the medium time frames, they underperformed at first, and now it's working really good. Really, it looks like breakout trades work really well across all of these, except for the medium ranges. There's some underperformance going on here. And what I'm going to do is I'm going to go to page filter and I'm going to put on that outlier tag. So abnormally large wins and losses, I want to remove those. We'll remove lost data and outliers. Now we can see things have changed a little bit. Now what I could ultimately do is clone these and put them side by side so you can really see the difference. But we can see that breakouts work really well. But one thing I can tell you is a lot of my bad trades are actually done in breakout territory. Notice how the yellow line is above the green in all of them but the micros right here. So I'm going to go to page filter and then I'm going to go to rating, add the filter, and I want to remove the red stars so it's crossed out. You can see how they're changing and stuff. Now when we remove the bad trades, we can see me mean reverting and my breakouts kind of perform almost exactly the same. So I'm good at both. Same thing with medium ranges and then micro ranges as well. We just don't have as high of a sample rate on the micro range for mean reversion as we do breakouts. But see how skinny and tight the lines are? So what's going on is I'm taking a lot more breakout trades that are impulsive. So what we can do is just filter that down and say, just show me the bad trades, which is interesting. Yes, we're taking more over here, but here they're actually exactly the same. What about management issues? What am I having the most management issues on? We'll go in, we'll do that. They look almost even, but the most management issues are on breakouts of micro ranges. And when I do have management issues, what's performing well? So this is ultimately how you're going to find edge, is by doing these little comparisons and filters and then take notes. There is a widget where you can actually take notes on the journal itself, which is the text widget, and you can just write whatever you want about these things. But I recommend putting every group together so you can just see the overall performance. Now, one thing I want to do is I want to remove all of the filters. Now, when I'm seeing something perform, like conservative versus aggressive trading, they both perform. So this is really hard to tell if I should do one style over the other. Now, at first glance, aggressive trading looks like it's better, but I can tell you by looking through the different months of the year and doing stuff like that, the performance seems to flip-flop and change. What I'm really looking for is specific groups that are above the zero line and below the zero line. The reason that is, it's telling me there are specific things I need to do and not do. So for our rating, we need to make sure we are not taking impulsive trades. Right here, we want to make sure we are clear on most of the trades. Here is calmness, which has a filter on it. I must have been doing work in this at some point. I'm mostly calm, so we can see it just outperforming for the most part. Content, I'm mostly content. Patience, we want to see how there's some that are below the zero line and there's others above. Obviously, psychology is going to affect trades. The higher time frame ranges is a little tricky. This one is really interesting as well. Now, while all of these are above the zero line, and this is that slip entry technique, when I start to refine the filtering process on this tag here performs substantially better when I filter it with every other trade. So when I have a slip entry on all these different time frames, my risk to reward is substantially better. So even though these are all performing, this one, when filtered down and comparing it to all the other different little technical setups, and here's the thing, if you put on too many tags, your sample rate goes way down. So it's usually good to compare two tags with each other when it comes to technicals. So mean reversions on the high time frame versus slip advantage. Then I want to see slip against. So I'm going to go through this process where I keep filtering stuff with each other, which it can take a long time. We are going to work on ways to simplify that process. I used to track psych prices, which I did retire because I realized psych prices don't matter too much. So the best way to sort of do this is just a great at first glance type of thing. Notice our multiple factors of support clearly outperforms and underperforms the zero line. So there are certain tags or certain trades that are outperforming. So this is the stuff I want to see. This is the real juicy stuff where it's like, okay, there's some edge here. What number is that? And we can see what's underperforming is one multiple factor of support, zero multiple factors of support, three multiple factors of support, and confliction. The best performer is four factors of support. Actually, the best performer would probably be 8 factors, but I just don't get enough of those traits. The best thing to do is build a master filter. This is what it looks like when it's built. We're going to refine this process, by the way. I kind of hack it a little bit where I use P&L minus a million or something to create group titles. So let me just show you what that means. Notice how this says high time frame mean 000. I color it white. I want that to be my group name. So there's all the higher time frame means, favor, against. Here are the mediums. Here are the micro ranges. Here are the shimmy entry techniques, the waves, which I've gone over this, the time of day. So the first and last 10 minutes of the day versus the rest of the day. The factors of support on the 30-second, 3-second, the total multiple factors of support. MFS, double R, Rabo trades, which are really hard to see. We can change the color of that. 3-minute plays, and then I put in raw P&L, win, and loss. So this is titled technicals. So I put all the tags in there, and then what I do is my management. So all the ratings, conservative versus aggressive, perfect entry, late entry, exits, the retries, giving up, revenge trade. And then I also put raw P&L, win-loss at the bottom of this. Then over here we have the psychology tags. Clear, confused, calm, content, patience. Now I relabel these. These are no longer in a question format. I just put 3, 2, 1. So you have the ability to name these. So instead of it being displayed, are you calm? I'm pissed off. It doesn't say pissed off here. I just make it say calm. This is the best way as of now to really dissect if you have edge. Now, at the end of the year, it took me 17 hours to go through these statistics. This is almost like an overglorified spreadsheet. There is this column button here, so you can toggle on what's important to you. We will be adding other things in here, like trade duration and other stuff like that. But for me, these are the statistics that are the most important. So number of trades, because I want to see sample size, cumulative P&L, my win percent, average trade P&L, average MAE, average MFE. We have average drawdown, profit factor. For me, some of these aren't as important, so I would say the most important thing for me is number of trades, cumulative P&L, win percentage, average MAE, average MFE, and profit factor. Now, there is no right or wrong way to do it. I'm just going to share the way I do it. Number of trades is important because we want to see if we have a high sample rate on something. So if one setup is working really well compared to another setup that is similar, well, is there a higher sample rate versus the other one? We obviously want to see if the trade is making money or not. I want to know my win percentage on it. Is it high? Is it low? Average trade MAE and MFE is important for me because that is going to show me realized, unrealized risk to reward. I want to know when the trade is open, how far is it really swinging against me before the trade actually works? Now, if we had average win and loss in here, not MAE, MFE, that would be a great statistic for me to look at. We're still developing this thing, okay? I don't think the development will ever end. And then profit factor, which is going to give me the realized gain and loss on these things. So in your columns, you can do that, and then the columns will adjust. So this is the 1, 2, 3 widget. If we go down and we just click this, this is what that is. So again, this, in my opinion, is the best way to look at this. Why is that? So let's say we have no tag filters right now. I can quickly look at stuff. So I can look at the cumulative P&Ls of things, see if anything is losing me money, which there's some stuff losing money in this section. For the most part, a lot of this stuff is making money. This range favor on the higher time frame, we can see there's 244 of those trades. However, the most is 993. So between favors and breakouts, we can see there's roughly the same sample size. But notice this one makes 120,000 versus this one that only makes 42,000. So for some reason on mean reversion, it is making far less money. It's at a 63% win rate, where this is 69%. So why is this making substantially less money than that? Well, it's because there's an outlier trade. So when we go in here and I say get rid of outliers, you'll see this changes drastically. This now goes to 52,000, so it goes up, and this dumps down to 81,000. So what that's telling me is a large trade was hurting me here, and there were a few large trades that were helping me here. So as we remove the outliers, it changes things. So the way I currently do this, and hopefully by the time you watch this, I've developed the better way, which it's in my head. But for now, the best way to do this is I look at just this group, and then I start to attempt to compare it to everything down here. And I just look at these numbers. And I want to see if there's any like abnormally high sample size. I want to know if the cumulative P&L is abnormally high or really bad. I want to know if the win rate is positive or negative. Why is this one, the mids, it only has 45 trades, but why is it at a 75% win rate? Well, it's probably because it's a low sample size, but we shouldn't be like speculating that. We need to like actually double check. It has a 2.6 profit factor. Maybe there's some sort of edge here. So I want to start to dissect that. So what I want to do is I'll come in here and we'll look at that. So we'll put on mids. And what you'll notice is everything goes to 0. So we are saying show us just the mids, no outliers. And then we can see every tag that complements the mids. We can see that most of the trades are perfect management. 15 of them had some form of a management issue. 2 of them were impulsive. We can see 30 of them were conservative. The 13 were aggressive. So out of these 15, what's our management issues? So we could see 3 of them were early entries, 9 were hold more, and 2 were held too long. A hold more tag is not a bad tag either. So I'm actually doing well on this trade because I'm just really taking good trades overall. We could see the random management. We're not having too many issues like not gathering information, not seeing patterns. A lot of these tags are newer though. So since these are newer tags compared to these, the sample size in here is unfortunately going to be lower. What about my clarity? Well, 37 of them I was clear. 8 I'm in between. I was calm. I didn't have any patience issues. So this is part of why this is performing. So if we go to mean reversions, so let's look at the mean reversions here. What's going on here? Well, we can see there's a lot of rating 1s. So I can tell you off the bat from a management perspective at first glance, this is hurting me. There's some management issues here. What are the management issues? Well, one thing I can do is to isolate management issues even further is I'll go to rating and then I'll just say, oops, we need to put the filter on. Just show me yellow stars. So it'll just you'll see this go down to 81. And then I can see 36 of those were conservative. The rest were aggressive. The entry problems were 11 early, 34 I needed to hold more, 20 I held too long. So what's hurting me here is I'm holding too long. We can see the cumulative P&L is down 9 grand. So this is why this is not performing as well. It's not that this specific setup is any worse than the mids. It's just I'm having more problems with it in the management area. I'm just holding the trade too long, which is destroying the statistic on it. So if we go to page filter, let's remove the rating system. And then what we can do is like look at it. So let's actually compare it. So what I'll do, we'll take this off, right? So page filter will filter everything here. Widget filter will filter just this window. So what I want to do is actually come down to here. So I've cloned these 2 windows. I'm going to put on the mean favor, okay? And then I'm going to put it on here as well. So we have 2 comparisons. Now I want to see what happens to the statistics if I remove holding too long. So where is that tag? Right here. So I'm saying remove held too long. What happens to the statistics? So up here on the widget level, we can see that, oh, this actually has multiple factors of support in here. We need to remove that tag. There we go. So 234 trades, and this is removing the held too long. We can see it goes down to 213, and we can see the win rate goes up to 66% versus 64%. The cumulative P&L jumps almost 11 grand, 10 grand, 52 to 63,000. The profit factor goes from 165 to 205. So it's going to be a lot of like putting stuff side by side, filtering certain things out like this to get an understanding of where I'm performing. And then I want to just start taking notes on my observations. And the process can take an extremely long time to do. And if I'm like confused about certain trades, I'll come in here and then I can go, you know what, show me these favorite trades. And this is the playbook here. Let's go to page 1. Now we can see there's a lot of trades that have 0 pictures. We added the playbooking feature way later in the life cycle of, oh, there we go. We're starting to get some stuff. Let me actually do this. We added the playbook feature way later in the journal process. So I have a lot of tags that have no images or no videos. But we can filter it for screenshots, videos, or both. We can see the tags. It's going to only show us the mean favor. Let me just show you this. A+ scalps. This is going to have all the videos and the screenshots as well. So we can watch the footage and we can look at all of the screenshots on our A+ trades. And if I want to, I can just go like this. And then I press play. It shows the short going on. If I want, I can say, hey, we need you to start the video like 10 seconds before the entry comes on. So it'll update all of the videos. And then this will be roughly 10 seconds or so. It could be off a little bit, give or take. And it'll show the entry coming on right about here. So I can specifically narrow stuff down and quickly look at the screenshots and the video footage to like better understand what's going on with these specific setups. You can quickly pull up the tags. Sometimes you might want to adjust the tags. If you want, you can quickly jump to that trade in the journal. So this took me all the way back to July 17th to look at that specific A+ trade. We can filter out if we just want to see videos or screenshots. We can color stuff by rating. So we can see the management issue trades. We can sort by ascension, descension. So adding screenshots and videos is very valuable. Very valuable because when you're like not sure about specific setups, there's something about just seeing that stuff in the playbook that is really helpful. And you can put this, this playbook widget is really easy to pull up, actually. So we'll come down here and it's this book symbol. You just click that. You can filter for whatever you're looking for. If you want to just see your rating ones or slip advantage trades, just do the widget filter and you can refine it as much as you want. This is why the review process really matters. This is why screenshotting stuff matters. So what I want to start to do at this point, I don't want to go through the entire process of what it took for me to come to the conclusions that I came to about this stuff. See, only 8 of these were A+. We can see which setups were A+. But you do this apple-to-apple sort of comparison by building out a master filter like this. And this is just by far the most effective way to quickly analyze what is going on in your trading versus looking at the pie charts or the histograms or whatever we have going on. While those can be helpful, I've been trying to figure out the best method and the quickest method to do this. So far, it's like this. There will be a tool we're going to come out with that's going to help make this process a lot faster, which I will not be speaking about at this moment in time. Okay, so I stopped the video for a moment. I want to let you know there is potentially a faster way to go through your statistics. If you go to your settings, there's export. Click on export. So I want to export all of my data. Again, I first started tagging November 5th. And this will be 2024 all the way up until here. Export it. So all your tags are going to be exported into a CSV file. And what you can do is go to ChatGPT and put it in here. So I'm going to have it tell me the numbers, the trade numbers on my shimmy entries. So let's see if it's right. 338, 483, 338, 484. It's a little off on this by 1. 260 and 485. So it is off. ChatGPT is off by 1, but for the most part, you could potentially use AI to help you through this process, but it's still going to require you to do a lot of manual work, which you need to do because you need to understand like what is going on. So now I'm going to go over all of these statistics, where the edge is for me, what all this means, and I'm going to sum it up. So as far as ranges go, I'm going to personally retire these specific tags. What I've noticed with ranges, because I can perform with them at any time, is higher time frame ranges, like on 30-minute charts, create these very large vacuum areas, which I call reclaims or slips. So when higher time frame or medium time frame ranges are present, this sort of mean reverty vacuum effect is more present. And what I did was I looked at a lot of screenshots for those specific trades, and I just kind of noticed the volatility expansion or contraction. So what is happening is it's creating momentum. And I'll just cut to the chase. The best trades, the trades that I'm having, the trades that consist of most of my A+ scalp setups are going to be these reclaim slip advantage style of trades. And it's almost sort of this mean reverty trade. Now, if you don't understand what I'm saying, just know that in my head, I know what I'm saying. So therefore, what I'm doing makes complete sense. So in my notes, I did mention this specific trade up here, mean mid, had unusual advantage. What I noticed is by looking at the pictures is since I'm trading in the middle of a range, not on the edge, it had more of these vacuum effects present. So therefore, the setups I'm just good at, that I just seem to do good at, are always present. Another reason they performed good is, as we saw earlier, there just was a lot less rating 1s on those. The medium ranges are sort of doing the same thing as well. If you look at the mid-medium versus the high time frame mid, this is at a 2.58 profit factor. So that's the highest of its grouping. And on the medium ranges, we have a 2.09. So there's something going on where I just seem to perform better in the middle of the range. But they're also both the smallest sample size. However, if you look at the average trade MAE, which is very important for me, I lose the least amount of money of unrealized loss on this setup. Whereas breakouts, I lose more. Like the trade just swinging against me more. It's not that that's what it's closing out as. But on the mids here, Favor actually has the best performance at minus 942 versus 997. But all three of these are pretty close to each other in a lot of ways. But still, I'm getting a better profit factor at a 70% win rate. So it does have the highest win rate, and so does this one. So there's something where I'm just performing better in the middle of a range. And then when you look at the micro range, you're seeing the same thing, a 73% win rate. The profit factor, however, is lower at 1.49 compared to the 1.89 here. I'm taking a little bit more drawdown unrealized in the middle of a range versus actually doing micro range mean reversions, which is only minus 733. So I'm taking a lot less drawdown by fading into micro ranges. Now, in my opinion, micro ranges have less volatility, less travel time. So I'm more likely to run into more management issues on these trades than up here. So medium range Favor right here. This specific tag performs really well with wave favor. So if we go in and I did a lot of my initial statistic analysis with outliers off. So when we do that, it really changes stuff. We're still at a 75% win rate here, 2.6 profit factor, 71 win rate with a 2.3 factor. Our mid micro ranges jump all the way up to 75 at a 2.33. So it's weird that I perform well. However, this one, favor here and wave favor here have really good performance when complemented with each other. So we'll do that. And it's a 72% win rate, 2.25 factor right there. 9 of them have multiple factors of support. We've won 13, lost 5. Unrealized loss is only 900. So one thing I'm really looking for is this average MAE. I want my trades to be as tight as possible. The tighter your entry, that takes care of a lot of management. The more precise you are at getting in at the right exact area, the better it is psychologically. Like if the trade's working right away, it's just better on you mentally. And that takes care of a lot of management issues. So for me, I chase precision for entries. So I really look at this number and I want to find the smallest number in this area. And I want to make sure that unrealized gain and loss is, I want this number to be as big as possible and this one as small as possible. So let's talk about the shimmies right here. Chronic, my student and I use these same exact 4 tags in this region. What's interesting is we both perform the best on shimmy entries. Notice it has a pretty high sample rate at 328. Notice the unrealized drawdown is 661, which is about 4 ticks. So that's something I should mention is I consistently trade the same amount of size. I don't average into losers. I'm not constantly changing my size. That's going to affect your statistics. So you're going to have to figure out a way to filter that, add tags or something. You're going to need to put on how many contracts you traded, because if you're always fluctuating contract size, you need a tag for each contract size you're trading. Otherwise, it's just going to absolutely skew the results. So for me, this is just over 4 ticks. It has the highest profit factor. Now, I perform well on all of these. The best one is favor, followed by really this rotation. So favor is the best for both of us. Mid is the second best. Against is the third best. And when there is no shimmies available, basically there's no volatility. It performs the worst for us, which tells us volatility is important for traders. Also, I looked at my win rate on a month-to-month basis, and I compared it to a monthly VIX chart, and my best win rates, my highest win rates were going to be when VIX was elevated earlier in the year. What I noticed between Chronic and I is his performance was shit on these 3 tags compared to his shimmy. This only had advantage for him. So I wanted to know, why was I performing even though they were just progressively shittier? You know, why was I performing on all of them, but he wasn't performing on these bottom 3? Turns out he is confused when he is taking those entry techniques. So a lot of his confused tags are paired up with mid shimmy, against shimmy, and no shimmy. So if he starts trading those techniques against or mids from a place of clarity, he will boost the performance on them. I have another trader, his name was Miller. He took exclusively this trade, and there was a lot of edge in it. So between the 3 of us, there's a tremendous amount of edge. When I pair this off and I just run statistics on this entry technique, and I pair it with each of these other setups, this shimmy favor just boosts the performance on every setup up here. So whether it's a breakout, meaner version, in the middle, wave against, wave favor, when I'm nailing shimmy entries, for the most part, it is boosting the performance substantially across the board. So it's one of those tags at first glance, it doesn't look all that great. It is a 2.6 profit factor, which really does stick out quite a bit. What's interesting is when I have these against shimmy trades, so I'll just put it on real quick. Let me show you the management issues compared. Let's actually do it like this, because again, this is where a lot of the edge is going to be coming from. So I put them up here to compare them side by side. Don't worry about these 2 columns here. Notice the ratings. We got 169 rating 3s and 187 management issues. So we have more management issues on against shimmy than we do here. It's 220 on the 3-star rating versus 71 versus 37. The total sample size is 328 versus 454. I'm taking more of these. and I'm a lot more aggressive when I do this trade versus being conservative here. A lot of the management issues for this against shimmy is going to be coming from the entry early era, right? It's 8-3 here. So I'm not really having entry technique problems when I have a shimmy favor, because in my opinion, this is the best entry technique. But I start to get a lot of entry earlies here. Down here, hold more, held too long, 47 versus 47. Hold more and held too long just depends on the volatility. Sometimes volatility is contracting, sometimes it's expanding. As far as exits go, it just depends on the condition. You're never going to dial in your exits. Like, I just have more issues with exits than entries. And that just comes down to the fact that sometimes the volatility is there and sometimes it's not. So we can see it's 33 versus 23. So they're off by 10 here. But the real problem is on the entry earlies. I reviewed all 51 of these trades and screenshots, and 51 of these trades were early because I needed to use this entry tech. So you could almost subtract 50 of these and add 50 here. So this would go to like 380 something, and this would go down to 400. So yeah, that's the problem here. What's interesting is this mid shimmy right here works really good on these medium range breakouts. I think it was right here. Oh, micro range breakouts. The profit factor is 4.23. Now the sample size is relatively low, but for whatever reason, it is working really good in this area. Also, the thing about shimmy against, if I'm having any psychological issues, I'm doing bad management or anything, this is an entry technique I just, for whatever reason, tend to gravitate towards. And when I filter out all the psychological issues, management issues with it, it actually is a decent performer. But for whatever reason, that is the go-to technique when things are not going well. There's other weird little nuances like mid-wave. Again, we have the wave, so let's go mid-wave. There's a 12.8 profit factor here, 90% win rate, 11 trades. This is micro range breakouts, so let's go ahead and filter that down further. We can see the entry technique is pretty diverse. 1 shimmy, 3 mids, 4 against, and 3 in no shimmy environment. We're getting 100% win rate everywhere except for this mid shimmy. So it seems like the technique doesn't really matter as much as this just performs. Again, the profit factor is going to go down as we get more of a sample size, but it's unusual. And that's something I want to just kind of like keep an eye on. So when we do have clarity, our patience and everything is perfect here, and we remove our bad trades like so, we have really good performance on favor shimmy at a 6.58 factor. So this is like clarity, best emotions, no bad trades. This substantially gets boosted at a 6.58% factor. And these mid shimmies against shimmies, they have no bad trades attached to them. We can see the sample size jumps up quite a bit on favor shimmy versus these others at 242, and it just performs better. So it's through this more nuanced filtering and comparing that you start to paint a picture of what's really going on. So time of session, does it really matter? Time of day, it doesn't, but it does. And this is something it goes down to clarity. I noticed that when I'm filtering time of day, which I built these histograms, right? You can see most of my cumulative P&L is being done sort of this 40-ish minute window. And the worst P&L is right before that 40-minute period, okay? And when I do a lot of like filtering and stuff, turns out I am not as clear often in the right off the open. Like I'm either clear immediately or it takes me a moment to build clarity. And this goes back to what we've talked about earlier in the video with the checklist procedure. Do I just have a read on the market or not? So there are specific times, especially here, where I'm just performing better. And I notice my confused trades, my bad performance, the clarity and the confusion are staggered. So when we look at the time during the session, they get staggered. And it just kind of goes to show you that it takes a moment for you to warm up to a specific regime before performance kicks in. My performance during time of day just matters how quickly I can clearly read what's going on. That's it. So those tags are going to go away. Now, as far as the 30-second and 3-second multiple factors of support, these are specific tags I'm not really all that interested in at this point in time. What I'm interested in is the total factors of support. Notice as we start at 0 and go up, the win rate starts to go up a bit. Now, these 999s mean it's 100% win rate, low sample size. The higher sample sizes in here have higher win rates, except for 5 factors of support. But on the lower factors of support, we jump, except for this 2-factor of support. So what was interesting about 2 factors of support, I'm like, why has that got a 2.09 profit factor? 4 factors of support is the magic number. Well, the reason for that is the 3-minute plays. The 3-minute plays, I started using higher time frame factors of support later in the year, within the last month or so of the year, and I believe that started boosting this. So it's at a 2.09. If we go in here and go to page filters, tag, add, remove the 3-minute plays, we can still see it's relatively high for some reason. And this really baffled me. Now, the thing is, some of my trades are being derived from a 15-minute time frame as well. I'm just not measuring the factors of support on the 15-minute and the 3-minute. I don't have individual tags for those time frames yet. So part of my thinking is it's getting skewed. So this is at 22 trades total. Remove the 3-minute plays. It should go down. Yeah, only one of those was a 3-minute play. But notice these lower factors of support. They're at 8393. Notice that. We'll remove this. 9196. So now we have 3-minute plays on. So the profit factor did increase on the 0s and 1s. And what I believe is happening, because I got real stumped on this, is the higher time frames I'm playing, those factors of support. And there's been a lot of times where I was leaning into the lower, just not having factors of support on the lower time frames. This one's interesting right here. This is something that deserves to be looked at on an actual equity curve. Okay, so this is how far a trade went in my favor if it worked pretty much immediately. It only went against me 1 tick or 0 ticks. This is actually 16 and higher. So some of my newer tags I have not tested yet are here. But notice here, this is going to be 4. So 18 trades went, and this is a slightly newer tag, by the way. These were first August 27th. So I've had 18 trades go in my favor and then come back. How did I profit on it? Well, we can see this is a loss. So I was trying to hold for more. So the profit loss is a bit sort of irrelevant. So 18 trades went 4 ticks in my favor. It could be anywhere from 2 to 3 to 4, okay? Somewhere in that realm. 13 trades went somewhere between 5, closer to 8 ticks in my favor. So this is set up in 4, 8, 12, and 16 tick increments. So I kind of round up to whichever one of these tags the trade is closer to. Next, we have the 12, only 7 trades. So we can see most of the time the trades are not going very far before they come back. And then there are times where it goes a little bit further, around 8 ticks before it comes back. And not often it goes 12 ticks and then comes back. But for whatever reason, we have a big ass number right here on the 16 ticks and higher. The problem with this specific line is I don't account for when the trade actually comes back. So these things can run 16 ticks and come back, or they can go 20, 40, 50, or 100 ticks before they come back. So this upper number is a little screwed up because I feel there needs to be another increment. There needs to be another 20 ticks, another 24 ticks, so on and so forth. Because I'm not sure if this went 20 or 40 ticks. All I know is it went 16 plus on these specific trades, and it either kept going or it didn't. I don't know the difference. So I had to do some things with my tags where I have no return, which is this 20 right here. So I added a 20 right here, a 16, 20, and then no return. This specific tag was originally at 16, but since this is sort of a 20 no return tag, this specific data point is a little screwed up. But what you'll notice is there are 31 trades here. If you combine these down here, they equal 38 trades. Up here, 31. So more than half of the time, a trade that works right away is going to come back. So what this is sort of telling me is if you take big trades, you're going to have a low overall win rate. You're going to be losing most of the time if you're trying to pick up, obviously, bigger trades. The problem is I don't know how many of these 16 tick trades actually come back. And then we have this big equity jump here. Let me look at this. Yeah, this trade made me $15,000, by the way. So that's why this is a little screwed up. But obviously that specific trade right here ran way more than the 16 ticks I was tracking. It went 93 ticks, but it got that specific tag put on. So what's interesting though is the trades that were running 16 ticks, I checked the duration with the trades table widget, and most of the time these trades were working under a 10-second trade duration. So what I notice is the best trades do work. If you're going to get 16 ticks or more, it's going to work within 10 seconds. So that's telling me there's either a lot of volatility or I just happen to get lucky and hit a big breakout. So yeah, the best trades do work right away, but they do it very quickly. So I don't have any conclusive things to say about this other than it's interesting. So I do want to go back to multiple factors of support. So the lower factors of support actually contribute better to with this favor shimmy. So lower factors of support actually, they're more fadeable, and higher multiple factors of support boost the win rate on against shimmy, so breakouts essentially, which is also an interesting observation I have when I was doing a lot of this filtering. But the most important thing is I really need to know if I'm going for a breakout or fade, and that's why I created the new breakout and fade tags. So there's this double R tag. I had retired it, and I was looking through a lot of my screenshots, especially the favor shimmies, and I noticed that on a lot of the screenshots, I kept saying double R. There's a double R here. And I had kind of got rid of that tag a long time ago for no good reason. I don't really know why I got rid of it. My trading system was evolving throughout the year, as it tends to do. And I'm like, I need to look at that statistic. So there's only 28 trades, but my God, it's at a 4.96 profit factor, and the unrealized drawdown is really low. It's like almost 3 ticks, 75% win rate, and the unrealized win is about 5 ticks. This is like a dream trade, a dream scalp for me. So this is going to be reclaim advantage. So it's basically going to be a combination of the favor shimmy and then a reclaim favor on cumulative delta, because cumulative delta likes to behave like price action. You know, if I can get those to align on a 3-second chart, it for some reason is performing extremely well. So I sort of brought that out of retirement. Also, the trades that are working right away, coming back to these 0 MAE trades, most of them are doing it on multiple factors of support. So that is telling me, hey, multiple factors of support is contributing to these things working right away. So it really takes a really in-depth filtering, comparing, note-taking to kind of like really extract where exactly the edge is coming from, because the tags alone aren't necessarily going to just scream at you. Because again, the shimmy favor, it looked like the range trades where they were all kind of performing, but when I started filtering and comparing, and just this favor shimmy just consecutively was just better than everything else. Like when we filtered out with no management issues, how it jumped to 4 something profit factor. So these are my win rates throughout the year. This is when VIX was spiking. Notice I'm in the 70%. And then I went back to 63, which looks like terrible win rates. I felt like I was getting better as the year progressed. What I was actually doing was I was taking less red star trades in the last quarter. So in the last quarter, I was doing better in the sense I was taking less crappy trades. And what was interesting, what was really interesting for me, as far as the conservative trades go, conservative versus aggressive trades, look at my win rate on aggressive trades in November and December. 80% and 74%, which was the highest for aggressive trades. Whereas November and December was some of the worst time for conservative trades. So actually pushing trades, I did substantially better in the last few months of the year. Also, I do want to say that when we don't have a filter here and VIX was high, even though these were really good win rate months, I took the most bad trades in those times as well, but still had a high win rate. So what's interesting about that is higher volatility, you can just get away with shittier trades and still have a good win rate. Now, coming into the multiple factors of support, as far as clarity goes, my clarity was the worst on lower factors of support versus higher. The rating 1 trades highest when I don't have multiple factors of support, especially when I go against the rhythm of the 30-second chart. Now, when I take conservative, so scalps, the mid-micro ranges, which is right here, is a 5.84 profit factor, 27 trades. Just really sort of stuck out. So there's something going on again where I just can trade the middle of a range really well, better than anywhere else. And a lot of people tell you to stay out of those areas. So even though aggressive trades perform well, I'm going to be more aggressive when my psychology is really bad, which makes sense because I'm going to be revenge trading and doing all the dumb shit. So I looked at my win-loss ratio on my entries as well as RR. So as far as the perfect entry goes, the win-loss ratio was 2.90 to 1. Early entries was 2.25 to 1. Late entries was 1.06 to 1, almost a 1 to 1 right here. The risk to reward was 1.361 on perfect entries. And then for some reason, when the entry was late, or early, I should say, it was 0.80 to 1 risk to reward ratio. So kind of a backwards risk to reward ratio if you think about it. I'm taking more unrealized drawdown than I am unrealized gain. Late entries was the worst at 0.5 or 0.47 to 1. So late entries are just terrible. The RR suffers. The win-loss ratio is the worst by far. Entry lates, or FOMOs you could call them, they're killers compared to the other entry types. So it's way better to be early than late. So as we look at exits, the win-loss ratio is 2.79 to 1 on perfect entries. Hold more is 9.88 to 1 win-loss. That's just because when I have a hold more tag, the trades are already won. You can see it's at a 91% win rate. That's most likely because those trades already won. I just needed to hold more. Held too long is at 0.72 to 1. Now, as far as risk to reward goes, perfect exits are 1.23 to 1. Hold more is 1.39 to 1. Held too long is 0.77 to 1. By the way, my total win-loss, does this include outliers? It should. My total win rate is 6.479 over 14 months, so you guys know. And this is the average win and loss unrealized. My total trading is a 1.75 profit factor. And this, I don't know if this includes commissions yet or not. I don't think it does. Before commissions, it's $469,267 for a 14-month period. Total losses equated to $62,000. We'd be up $1 million if we didn't have, wait, would we? Oh, wait, $622,000 for total losses. Win would be over $1 million. So what's interesting about the exits is they have roughly a similar sample size. And when I was originally running the statistics, it was with this and this off. So 174 to 141. It's just your exits are going to probably be all over the place just because volatility is expanding and contracting. So a lot of my perfect entries are about 40 minutes into the session on the open when I can read well. Early entries stagger after the open or after the sweet spot. So what's interesting is there is a time and day where I perform, but there's a time of day where really good entries and early entries seem to stagger as well. Late entries are on the open, after the open, and on the sweet spot, most likely due to emotions. Turns out early entries are substantially fueled by patience issues. So when we compare early entries, a lot of it has to do with FOMO, followed by late entries. But late entries are nowhere near as bad as early entries from a patience standpoint. So out of all three entry types, a lack of patience is just substantially impacting early entries. Clarity is the same. Let's see. Perfect exits are in the sweet spot on the open. Hold more is in the sweet spot and can fracture across the rest of the session. Held too long is open than midday around lunch or before, which makes sense seeing how volatility contracts around those times. So lunchtime volatility contracts, and that's where I'm running into a lot of held too long trades is going into the lunch hour because volatility again is contracting. Held too long is also being fueled by contentment issues, so I'm not happy with the P&L. So a lot of times those are coming in isn't because I'm just holding too long. It's because like my P&L I'm not happy with, and I'm just trying to fix P&L problems. So what's interesting is it really isn't because of volatility in most circumstances. Also, held too long is just it's fueled by really bad management shit like giving up, revenge trading, all that stuff. So holding too long it's bad psychology, bad just not happy with the P&L, trying to fix a problem. So we have the flip hit right here. I'm more likely to flip hit early entries versus late entries by a ton. Early entries have more issues in the random management category than lates. So that would be fixated on an idea, giving up, impulsive, stuff like that. Late entries virtually have no issues in the random management category, which you can see it says random here. So what about trying? So the way we figure out if it's a first try, since there is no tag for first try, is we just say, hey, remove retry 2 and retry 3 tags, and we will be left with first try. So try 1, try 2, try 3. It's exactly as you probably think. The win-loss percentage gets worse. So try 1 is a 66.29% win-loss ratio. Try 2 is 59. Try 3 jumps to 69. So that's weird. Try 3 has the highest win-loss ratio. So try 3 actually performs the best for win-loss ratio. However, risk to reward is where it changes. Try 1 is 99 to 1, so almost 1 to 1. Try 2 is 0.88 to 1, and try 3 is 0.84 to 1. So I'm taking more, just bigger swings on the back end versus the profits as I continue to go up in tries, which I guess makes sense. Now, some of my biggest trades have been on multiple tries. So some of the outlier trades that have made a shitload of money could be a try 3. But those are outliers. This is just like everyday trading. The trade ratings get worse as tries increase. So as we're seeing like try 2s and 3s, the ratings start to flip where you're just seeing more red and yellow stars. So I'm taking worse trades as I am trying more. So I'm seeing more management issues. Aggression versus conservative increases. So I'm more aggressive as the try count increases. So that's starting to tell us a story. Try 2 and 3 are fine, but I'm more likely to do those on shittier trades and stuff. There's a time and place you can do that, but they seem to be related with bad psychological things. Clarity starts to get way worse as the try count increases. Patience. So my red patience right here starts to increase dramatically on try 3, which makes sense. Flip hits, when I'm flip hitting, going from long to short, short to long, I'm having a lot of management issues versus green star trades. So I'm seeing a lot more yellow stars than greens when I'm flip hitting. However, the conservative to aggressive ratio is 50-50 on flip hits. Patience and contentment are also equally an issue when I'm flip hitting. So there seems to be some form of psychological issue going on there as well. But the difference between conservative and aggressive trading, it doesn't really change. Also, when I'm flip hitting, these random management issues start to increase. So when I'm flip hitting, every one of these technical tags that are yellow that say mean against, these all go really high in sample size when I'm flip hitting. So I'm taking breakouts essentially when I'm flip hitting, which that's starting to paint a little bit of a picture here. So the win-loss ratio on flip hit is 1.74 to 1. So it is winning most of the time. It actually has a nice equity curve if you really look at it from an equity curve standpoint. So that's what it looks like, the flip hit. But I mean, look how jagged it is, and it is plagued with psychological issues. So this kind of goes to show you, it's like, it's okay to do, but my God, there are issues attached to it. Risk reward is about 1-to-1 on flip hits. Stats are great, but it's plagued with management and psych issues. Fixated on an idea, which is right here. It is dominated by confusion, but not really any technicals. Contentment is an issue, but patience is worse. So as far as fixated on an idea, patience is plaguing it more so than content issues. Giving up on a trade is dominated by wave against, which is a technical play, and shimmy against. And the content issues followed by patience. So the content, while it's nowhere near, content issues are nowhere near as bad as patience. When it comes to giving up, it's because I'm not happy with the P&L. So, I mean, we kind of saw from a technical standpoint where edge is. Now we're starting to see how things unwind for me, and the patterns of what I start to do are. Impulsive trades, which is here, are dominated by shimmy against here and a bit of wave against here. Shimmy against isn't necessarily a bad tag. It just gets dominated by psych issues, which screws up its statistics when I'm not well mentally. Impulsive trades have the worst clarity rating, so I'm far more confused when I'm impulsive. So not gathering information and didn't see pattern. Not gathering information and didn't see pattern kicks in on 4 MFS and below. So if we go to our multiple factors of support, I'm more likely to not gather information or see patterns on these lower factors of support. They dominate shimmy against and wave against. The red star ratings skyrocket and outperform green star. So you're getting way more red stars. Also, I'm starting to hit earlier entries as well as holding too long. Also, a large chunk of revenge trading, which is a tag, starts to kick in. Patience issues also get high on not gathering information compared to didn't see a pattern. Revenge trade has clarity and patient issues, but content dominates. So again, I am not happy with P&L, so I revenge trade. Multiple factors of support shift between clarity and confusion in between combo. Higher MFS leads to more clarity, lower MFS is dominated by lack of clarity. So for whatever reason, multiple factors of support just boost clarity. Makes sense though. So out of the 79 A+ scalps, which we don't see the A+ tags in any of this, but there are 79 of them, and it is a bit of a newer tag. Out of the 79 of them, 34 were slip ranges. So just under half. An additional 16 were reclaim trades, so they're kind of the same. An additional 16 were reclaim trades. Reclaim trades they're very similar to the slip range trades. Then there were a few higher time frame mean reversions, a couple of channel trades. The rest I wasn't completely sure on, as the screenshots were not good enough to tell, but they look like breakouts of some sort. So the other half seemed to be of some other magnitude. Now there is a fractal tag, which I'll show you guys. This one here. I had retired this tag. When we come down, there's 7 of them. 1 of them lost, 6 were wins. Now this is an extremely low sample size. However, 4 of the fractal plays were A+ scalps. So there was some sort of fractal, like a wedge and a wedge on 2 different time frames. And then another one of the fractal plays out of these 7 was a A+ hold. Now here's the deal. When you're doing this for the very first time, you're going to have really low sample rates on certain stuff. If it's pointing in a good direction, you need something to sink your teeth into it, right? You don't need to have hundreds of samples sizes to have any form of direction in trading. I mean, it could take you a year to get enough sample size to really paint a clear idea. However, as you're doing this for the first time on a week-to-week basis, I mean, what looks promising? Try to go in that specific direction. You need to find tags that you can just, again, grip your teeth into and see what happens. So I had retired the fractal tag here, and then I pulled it back out because I think it's worth looking at. And this is the power of the review, pulling out the double RR and the fractal tag. December and November had the highest win rates for aggressive trades when reviewing screenshots. Something we talked about. I'm going through my notes here. I noticed that looking through my screenshots, I could see the trading like adjusting and evolving throughout the year. However, November 30th is where I saw the adjusting stop, and I stuck do basically the same thing throughout 2 months, which is interesting because it boosts the win rate on aggressives over the last 2 months. As far as my A plus scalps go, they're 4.07R. A plus holds are 3.0R. So the P&L swing on A plus is scalps versus holds is just definitely a bigger difference. So if we remove that and we go down here, we have scalps on the left, holds on the right. These are A plus tags. You can see the MAE, MFE is 1100 versus 2300 versus the scalping, which is 321 by 1266. Now, the win rates are 100% on these trades because they're A plus trades. They have great management. So when I'm tagging A plus, I mean, these are just good trades overall. They were A plus trades. I knew what I was getting into. I did it and I performed it well. So it gets the tag. So A plus trades, in my opinion, are going to have that high win rate. Now, there could be times where there might be some sort of A plus trade, but then there might be a little bit of management issue on it, and I don't give it the A plus stamp of approval. But that's the thing. I want to look at my playbooks of these A plus trades that worked beautifully because I want to see what is going on, what is the common theme when I'm reaching 100% win rate like this. So then there was finally outlier trades, which was one of the last things I personally reviewed, which was just this specific tag. And there were 79 trades, 64% win rate, 51 wins, 28 losses. The 28 losses accounted for 131,000, whereas the 51 wins accounted for 262,000. The thing about outliers is they were all over the place. They ranged from A plus holds to just okay wins to really bad losses. Now, what was interesting is the flip hit tag, 21 of the 80 flip hit tags account for outlier trades. So there's a nice little chunk of flip hits that are coming in that when I flip hit, it can account for either a bigger win or loss. I've actually not done this, so let's do it real quick. P&L bigger than $1. We want to leave this blank. So flip hits then goes to 15. So out of the 21 flip hits, 15 of them were positive P&L. When we look at the clarity rating here on the outlier trades, if you add these two up, it's 33. So 33 trades that were not crystal clear versus 46 trades. So really, the spread between clarity and confusion is rather tight. So again, this tag is kind of all over the place. And again, the biggest wins for me, they're going to be right here in that sweet spot, that 40-minute sweet spot. Notice that, let me actually make sure that I don't have the positive P&L on, and we don't. So again, I'm getting most of the biggest wins here and in the launch hour, which is really interesting. What I think is happening is I just have more context, more read. The longer I sit in a session, the more clear I am about it. The more likely I can make a better decision. Notice the biggest losses are right off the open, near the open, and then they dip down in my sweet spot, which I've talked about multiple times now, and then it gets boosted on this end. Now, there's something called compression, which is basically a rising wedge almost. When I was looking through a lot of my A-plus hold trades or my big outlier trades, that pattern was showing up. Not frequently enough that it's like, hey, I need to look at it, but it was often enough that compression is definitely possibly worth looking at in some form or fashion, whether that's tagging it or putting it into a checklist. Now, one thing I noticed with my A-plus holds, what made a good A-plus hold? The A-plus holds were different than the A-plus scalps. The A-plus scalps, more than half accounted for some sort of reclaim advantage. A-plus holds, they had a lot of narrative and context going on, and I was marking up the charts, and I seemed to talk about a lot of different areas that could have happened days prior, or it could have been areas that happened a couple hours ago. And I'm just continuously painting this picture before I get into the big trades. Now, the best trade was a Rabo, a reclaim assisted breakout, and I'll show it so you guys can see it. We'll take off the outlier because it made 15,000. It was ridiculous. We'll pull up the playbook here just so you guys can see how easy it is. And then I think descending, put it on column 1. Nope, ascending. Interestingly enough, the Rabo tag is not on it. Reset. You know what I screwed up here? I needed to put in P&L. There it is, 15,000. Does it have the Rabo? It should have this Rabo tag on it. Let's see if this is the correct one. That's not the correct one. This one right here. This is it. So we'll put on the tag. It does have the Rabo tag. So when I page filter Rabo, there it is. Only one against me, $175 and 15,000. We can also we could see the entry. This might be a flip. There it is. So it's a short. So I took a loss and then I flipped it short. So it's actually a flip hit, which is interesting. Which for whatever reason I don't have that tagged, but it is 100% a flip hit. So adding this tag later really shifts things. But anyways, this is a range that was over the course of several days, reclaim assisted range break, and then we could see where I marked my entry and my exit. This is a 30-second chart, so these are 5-point increments right here. However, a lot of the A+ holds were very elaborate like this, where it had quite a few context reads going for it. They were almost all really unique in their own ways. However, there were a fair share of slip range trades that were A+ holds or outlier wins. However, those didn't account for half like on the A+ scalps. So to wrap things up, this is the best way to do it. You need to really be comparing things together. I've already talked to the developer. We are going to create a widget, a new tool to help make this process quicker. But in the end, you're still going to need to do comparisons. The tool we're going to create is going to create the ability to do the comparisons like we're doing here, but it's just going to be a lot faster. And if you're a real visual guy like me, reading all these numbers can cross your eyes at times. Now, there may be other methods you can use to compare stuff. If you like to run equity curves and you want to compare equity curves to equity curves, pie charts to pie charts, I mean, that's why we created Tradecraft. All of the widgets are customizable, so you have the ability to do that. This is just the workflow I found that works the best, because when you have just this data right here, it's more compressed, easier to read, quicker to go through, in my opinion. I hope this was helpful, and I look forward to doing another one of these videos in the future.